hearing on two bills. So the first bill we're going to hear is 2564. So I'm going to open the hearing on House Bill 2564 at this point in time. Eileen, would you like to brief us on this bill?
Thank you, Madam Chair. Good morning, members of the committee. House Bill 2564 amends KSA 40-2, 227, and that relates to the requirements for the methods of payment made by dental benefit plans. This bill was sponsored by the House Committee on Insurance at the request of Representative Rivas on behalf of the Kansas Dental Association. And the bill passed the Committee of the Whole on a vote of 119 to 3. So under current law, when initiating or changing payments to a dentist using electronic funds transfer payments, including those virtual card system payments, a dental plan, the plan's contracted vendor or health maintenance organization, is required to notify the dentist if there are fees associated with a particular payment method, and then to advise the dentist about the available alternate methods of payment and how to seek such an alternate payment method. What the amendment would do would require the dental benefit plan, the plan's contracted vendor or health maintenance organization to require that the dental provider or the provider's designee expressly accept a payment of a claim using either credit card or electronic funds transfer. And that express acceptance would be expressed through a clear and direct agreement to the terms of the payment method, communicated explicitly in writing to make me be part of that person's permanent record. I'm kidding, sorry. That was totally inappropriate. By the dental plan to the dentist, violation of express acceptance would nullify any election on claim payment methodology until such a time as express acceptance is actually executed. The dentist's selected form of claim payment methodology would remain effective until the dentist were to select something else, an alternate method, or until a new contract would be executed. And if approved, this bill would become effective upon its publication in the statute book. And Madam Chair, I can stand for questions.
Thank you, Eileen. Committee, do you have any questions? Thank you very much. Appreciate that. Our very first conferee, we don't see the dentist in here very often. Kevin Robertson, welcome.
Welcome, Madam Chair. Appreciate being in the committee today. Hey, there it is. Sorry, I thought it was already green. Kevin Robertson, Executive Director, Kansas Dental Association. Thank you very much, Madam Chair. I don't know about you all, I'm exhausted listening to that explanation. So let me see if I can get you to understand what we've got going on here today. So, first of all, that language is not Eileen's fault or any other reviser. That is a specific language that was put together by an NCOIL model legislation. So that is one section of an NCOIL model that actually has 4 different issues in it, and this virtual credit card, which we refer to it as, is one of these sections. So let me kind of go back in time a little bit and tell you how we got to where we are today. And before I move forward, let me tell you that this bill has everything to do about how an insurance company, a third-party payer, pays a dentist, not how a patient pays a dentist or anything with patients. This is about the insurance company and the dentist and how they're paid. So back in 2022, there had been a couple years worth of experience where dentists were starting to be paid by insurance carriers by what we call a virtual credit card. So instead of sending a check or even a direct deposit or some other form of payment, they were paying them by a virtual credit card, which required a dentist, a dental office, to like basically type in some numbers or into the web portal and then be paid. The problem with that, and it sounds great, right? How easy is that? But it comes with a 3 to 6% fee for credit card processing. It's just like when you go and pay, use your credit card, and that business has to then absorb that cost, or maybe they charge you back. But that's what was happening. So our the dentists in Kansas were upset with that. I mean, they're small business owners. They're trying to make ends meet. And they're, getting into networks for insurance companies. Maybe it's 60%, maybe even less of what their usual and customary rate is. And now they're going and they're being paid and maybe getting a 5% fee on top of that. So they were unhappy with that, and NCOIL recognized that, and NCOIL then had the first template. So we came to you back in 2022 with, at that time, the NCOIL template, which you all passed. And at that time, or the current law as it stands now, says that if that insurance company has to offer a type of payment that does not have a fee attached to it, right? So they can still offer to pay via virtual credit card, but they can't require a dentist to pay via virtual credit card. A dentist could still accept that if that works within their business model, but they have to allow a dentist in their network to opt out of that type of payment. So that passed. That was all well and good. Frankly, a lot of dentists did opt out of that type of payment because they didn't want to pay that fee. But what happened then, about a year later, I start getting phone calls from dentists that now arbitrarily the insurance companies have opted them back in. So you've opted out of, we think of, oh, well, you opted out of one credit card from one insurance company. Well, dental offices, they accept a lot of different insurances. So they've opted out of several insurances. Now they're being opted back in. They got to re-opt out. They didn't even know they had gotten opted back in. So that created another problem, right? So now we're kind of back to square one. At the same time this is going on, other states had passed that 2022 NCOIL legislation. Dentists around the country are having similar issues. The American Dental Association got involved at that point, went back to NCOIL and asked them to relook at this issue. So in November of 2025, so just 4 months ago at the NCOIL's last meeting, they readopted the template legislation with the changes that we have before you today in 2564. So what does 2564 do that's different? It still allows an insurance company to offer virtual credit card. They do still have to offer a non-fee-based payment plan or method to the dentist, except for now, basically, a dentist has to opt into the type of payment that they're going to get. So an insurance company can lay out different types of payments. One of them might be virtual credit card, but now the dentist has the opportunity to say, no, this is the one I want. And once they pick that form of pay, that's the express language, right? It kind of gets a little wordy in this particular bill, but they expressly has to pick the type of payment. And then once they choose that type of payment, it is in force throughout the duration of the contract. So it can't be opted back in, with a virtual credit card arbitrarily. I will tell you throughout this whole process, we did go to the Department of Insurance. We had several dentists file complaints with our Department of Insurance who looked at it. The Department of Insurance said, yes, we do see that this is happening. We acknowledge it's happening, but there was not a specific date or any type of time limit that was put into the original legislation. So as a result, that's kind of what started all this process. So that's where we are today. I have with me today Dr. Dan Nielsen, who is an oral surgeon in Olathe. And then you have two written testimony that are presented today, one from Dr. Adam Lukens, a general dentist in Wichita, and Dr. Nathan Niles, who is a general dentist in Arc City. So with that, I'll stand for questions when it's available.
Committee, I think we'll hear from our next proponent who's here in person, and then we'll have questions, I'm sure.
Thank you.
Thank you. Dr. Danielson, welcome to committee.
Thank you. And make sure that we're on.
Yes.
Chairwoman Dietrich, member of the committee, I'm Dan Nielsen. I'm an oral surgeon practicing in Olathe, Kansas. Thank you for the opportunity to discuss my support of House Bill 2564. I strongly support House Bill 2564. The cost to provide care for patients is increasing at an alarming rate, and House Bill 2564 will provide the people of Kansas aspects of transparency in the insurance payment process. This bill, as already mentioned by Kevin, it's a fix from a previous 2022 bill that was passed. And I feel like what we're trying to do is get back to the legislative intent that it was meaning to do. I want to share my experience. Obviously, Kevin covered the nuts and bolts that fantastically. So I want to add kind of the real world, how this really happens, what I'm really running into. So from my experience with the virtual credit card, as you know, if we're a provider for an insurance company, when I first started, it was about 16%, and that's in 2022. I'm averaging about 36% that we write off. It's contractual, and that's something we agree to. When this started, when the rates say it's between 3 and 6%, it's 5+ in experience, because when they give you a virtual credit card, it's not an actual credit card. When you put your chip in, that's the 3% rate. If you have to manually enter a number, that's the highest rate, because of course that's the highest chance of fraud. So as you can imagine, we're getting added 5 and 6% on top of what we're already doing just to get the payment that, the way I see it, we kind of have earned. That's really what kind of sparked the disdain from the dental community. The other part of it too is there can be a delay in you trying to go back and get another method, and then patients' claims get taken out to 4 or 6 months. And when they're calling our office asking, why has this claim not been paid, when my insurance company tells me they've taken care of it, as you can imagine, that's kind of the catch that we run into. So from the voice of my colleagues, when this came out, we all were very excited, obviously very surprised when they kind of pulled the carpet out from underneath us, is what it felt like. When all of a sudden, after a while, 6 months, 1 year, we were back getting these credit card payments. When we went to the Department of Insurance, and I'm learning how the legislative game is going on, and I have a lot more respect for what you do now, because to get something passed is quite a feat. But they said there's nothing illegal. There's, you know, this is what we enforce. You didn't put that term in there. So they said, get back, do what you did in 22, and if you think there's a correction that makes sense, go do it, and that's what we're trying to do. And as I mentioned, hit that legislative intent. From my personal experience, I've been receiving virtual credit card payments in my office for at least 5 years. My staff spent a significant amount of time in 2022 going through the opt-out process. And please understand, you don't just opt out with Delta. You don't just opt out with MetLife. You have to do every individual plan. So for example, in Olathe, 3 great examples: the Olathe School District, Garmin, City of Olathe, those large policies, all with a particular provider, we had to go through and do this process. So when I was getting ready to prepare for testimony, I sat down with my practice administrator, and we added up at least 150 plans over a 6-month period in 2022 when we applied. Man hours, women hours, person hours, I don't know what that was, but it was a lot. You know, and at the end of the day, what I would rather my wonderful staff do is answer the phone, take care of the patients, get them booked, get their problem solved, and it pulled away from that. So as you can imagine, the frustration from my end, and when my staff looks at me and says, okay, should we reapply? And I have to tell them, no, I can't see the purpose. It just felt completely futile. So when we got this process together, I was absolutely happy to be on board with it. I'm a small business. I have 2 members that can actually know the insurance process. And those are the ones that have to be calling, that have to be filling out those forms. So as you can imagine, it just completely log-jammed me in my practice. I was very frustrated. We had this great Kansas law. It made a great difference. But in my opinion, the insurance companies, they're insistent on finding a way to continue the virtual credit card. How does this payment method help the insurance companies? That's what I struggle with. I will attest, it does not benefit the patients and is horribly burdensome to the dental provider. What you have before you today is a bill that closes the loophole but maintains the legislative intent for the previous bill. As Kevin covered, first, we will opt in. So the default is your opt-out. And when I was in the House committee, I thought it funny, one of the members said, well, what would you want? And I said, the best thing is a paper check. They work beautifully. But the direct electronic transfer of funds, that works great too. Old school, I guess that's what this is now. Second, there'll be a term that'll be set. And basically, until the dental provider says, I want it a different way, or I think as the language is now, the length of the contract, which seems, I think, fair and reasonable to me. And lastly, it does comply with the end coil language, which other people understand better than me, but I know it's important and it gives direction. In conclusion, House Bill 2564 prevents a business practice that does not help patients, does not help the dental provider, and surely increases overhead. In addition, this law has been previously passed. We ask for you to accept and move forward our improved bill to ensure the protections it will provide. I ask for your support of House Bill 2564, and thank you for the opportunity to testify.
Thank you. Thank you, Dr. Nielsen. I appreciate you being here. Committee, those are the two in-person proponents. Do you have any questions for our dental folks? Senator Warren? And Senator Gossage, did you raise your hand?
Thank you, Madam Chair. Appreciate it. Thank you for your testimony as well. So just for those who are following along and may not be familiar with the NCOIL acronym, could you state what that is?
Yes, I'll say it's the national, probably better spoken by him if that's okay.
Either one.
It's the National Council of Insurance Legislators.
Perfect, thank you. And then a second, more substantive question. So just so I can be fully informed, I took a look at the opponent written-only testimony, and I wasn't able to find the second one. But anyway, the first one here is from the National Association of Dental Plans, and it's talking about the opt-in, the opt-out, and their concern is if a provider does not affirmatively make an opt-in selection, if the bill were to become law, right, it becomes unclear how payments would be processed, increasing the risk of confusion, reimbursement delays, and disruption to provider cash flow. So could you talk to that for a minute? Because it sounds like if that's the case, that nonetheless, providers are willing to accept those changes in order to get the opt-in.
Absolutely, that's a great question. I would tell you they would go back to the methods that they've been using for 30 and 40 years. Paper check is kind of the most old school, but otherwise, I would say the vast majority of them will get a claim. It gets directly deposited into my bank. We get an emailed statement of these funds were put in on this claim. And I would still say the vast majority of our payments are that method. The vast majority aren't this, but it has been increasing.
So you wouldn't be concerned that the association raises that the increased risk of confusion, reimbursement delays, and disruption to provider cash flow, you don't agree that that would be a problem?
No, I mean, my biggest source of delay would be the fact that we get this credit card, and then when we ask for a payment that doesn't have the 5 or 6% lug, that's a 4 to 6 month delay.
Okay,
I mean, oh, sorry.
yeah, no, I'm glad to have those concerns that were raised addressed. So thank you for clearing that up for me. Appreciate it. Thank you, Madam Chair.
Thank you. And Senator Warren, I missed this myself, but both signatures are on the same letter. So we only
Okay,
have
there
one
it is.
letter. Yeah, I missed that too.
Okay, thank you.
Thank you. Senator Gossage?
Thank you, Madam Chair. Just for the record, I am a member of NCOIL and serve as chair of one of the committees. I just wanted the body to know that NCOIL, yes, it stands for Insurance Legislators. When I went to my first meeting, I was expecting everybody was an insurance agent like myself. I was it. The reason I say that is they invite legislators that serve on insurance committees. And so that doesn't necessarily mean that they're fully informed of everything about insurance. And I sit on Fed and State. That doesn't mean that I know everything having to do with Fed and State. So I just want to make sure that people understand these are not people that are professionals in the insurance industry. Do they do good things? Yes, and I'm proud to be a member of the organization. Are you required to take insurance as a dentist?
No, you are not required.
Correct. So since you're not required to take it, I can tell you as a health insurance agent, I'm licensed in multiple states. I have the same issue with how I'm paid. So they will say, sign up for this or this or this, how would you like to be paid? With paper check, I ended up getting a statement from our treasurer's office saying, you have some unclaimed funds. So evidently they sent it, wrong address, they just put the money in there. Paper checks are not always the best, but I get it. I guess my concern is that, yes, you accept a lot of different insurance plans. I understand that. I work with a lot of different insurance companies across the country. I have to fill something like that out with every single one of them. It's just because they all pay a little bit differently. If we already have in law, if we already have in statute that they can't require you to use this method, you already are allowed alternatives. How is that policed? In other words, when they automatically put you back in, even though you had opted out, and you went to the insurance department and they told you they regulate insurance companies, but there's nothing they can do. I'm a little confused by that if it's in statute. Can you, maybe we need to ask the insurance department to come up?
Is we didn't set a term. We just had that we had the option to opt out. And there, and nowhere in the language was there any term, and they inserted one.
So if they changed it and now they say, here you go, and we put you back in, you should still be able to opt out. I mean, if there's no term, then that should mean you should be able to opt out, correct? Maybe I need to ask.
We can. I just, for example, the time and effort that my staff put in, if I did it again and I'm doing it every 6 months, to me, it's not really a solution. It scares me because those are the people that should be filing your claim for what the work you had done. So what we're trying to do is make sure that we're not adding every 6 months, you have to go through however many plans you're on to re-up on something that you didn't want to get out of, would be my answer.
And
One last question, if I may, Madam Chair, and it's for Eileen. In line 22, require that the provider, the definition of provider in this case is typically a provider would be the dentist or the doctor, and I'm not quite following that sentence. So it starts with B, if initiating or changing payments to a dentist using electronic funds transfer payments, including virtual credit card payments, a dental plan, such dental plan's contracted vendor or health maintenance organization shall, and then we're saying require that the provider designee through express acceptance to accept a payment of claim using the credit card. It sounds like this is just requiring that the dentist has to accept it. Am I missing something?
So I think if you read the lead-in language to those 3 subparagraphs, if initiating or changing payments to a dentist using electronics fund payments, including da-da-da-da-da. So if the dentist is using it, or I'm sorry, is starting to use it, or is changing their methodology to use it, then those things have to occur. To require the provider or the designee of the provider elect through express acceptance. My caffeine clearly has not kicked in yet. It means that you are definitively agreeing to something. You are agreeing to a term, a contract term. And it's not that they can say, it's like when you guys take a vote and you say all in favor say aye. By saying aye, you're expressly stating your vote. Here, they have to make some kind of action to expressly accept those changes, so it can't be done without their knowledge.
So in this case, provider is the dentist.
Correct. Or the designee, I'm assuming like a billing agent or something like that. Back office type leased organization.
So the require is for the insurance company is requiring the dentist or through express acceptance. Thank you.
So
Thank you, Madam
That's
Chair.
where you're getting your opt-in. You can't say, if you don't tell me that you want to not have it, then you're still going to be in it. That's an opt-out. They have to opt in by saying, yes, I want to do this.
Could they do that by giving them several options and then they would pick the one they want?
That's already assumed that that's occurred in the lead-in language in subsection B.
Thank you. Thank you, Madam Chair.
No, thank you for your questions. Any other questions? Senator Hill?
Thank you, Madam Chair. I thought I was clear until that, but, so, and this is a question for the reviser. Where it says require the provider, I thought if they didn't do anything, there was a base plan. I mean, there was a base conveyance of acceptance. But this says that they have to choose one. Is that what that's saying?
And please correct me if I'm wrong, but my understanding is that the dentist, in selecting what method of payment they're going to accept from the plans, if they choose to do electronics fund transfer, or they're going to start, if they're switching to it or changing it, or through, credit card or any of those things, if they're already in something and they're choosing to change it, that's when they're going to have to expressly opt into it. If they've never used it, it's a new dentist setting up a practice and they're initiating that service, they're going to have to expressly accept it. Am I?
Madam Chair, if I may.
Yes, you may.
Senator Hill, great question. I would tell you the default position is the insurance gets to pay you how they want. So obviously, our contracts are signed once, and then they're ever-changing without our additional signature, and that's how those contracts work. So the default is what the insurance company prefers. So when we did the first law in 2022, we had the ability to opt out of those credit cards, but the default went back to their choice. The language now, as I understand it, is we have to opt in to getting those credit card payments. And if not, the default is that we stay with a non-credit card payment option.
Okay, thank you. I think I understand the rationale. I'm not sure I understand the wording, but I think I understand the rationale. Okay, thank you.
Senator Warren.
Thank you, Madam Chair, and I think I have a simpler question. So we're talking about dentist and we're talking about provider, and this is probably a question for the reviser. So in current statute, as I'm looking at the bill, it talks about a dentist, this is all on page 1 of the bill, a dentist at line 13, the dentist on line 17, the dentist on line 19, and then we get to, and that's all current law, and then we get to the bill and the amendment, and then we get to line 22, require that the provider or the designee of such provider. Why are we using the term provider and not dentist?
Go ahead.
Thank you, Madam Chair. Because, I guess we could, but in some cases, and you can help me, Doctor, in some cases, it's not necessarily the dentist who's providing the service.
I would assume it'd be my decision. I would have an agent of mine acting on my behalf, but it would inevitably be, and that's for the dentist that owns the practice. If you're in a corporate-owned practice, then that would not be the decision of the dentist. I hadn't thought about this. It would be the decision of the business owner acting on behalf of the dental practice.
So we do purposefully intend, because further in the bill and the amendment on line 31, we then go back to talking about dentist again. So in the bill itself, sometimes we talk about provider or the provider, the designee of the provider, and we also use the term dentist in the bill itself. So who are we talking about when we say, kind of to the previous question, who are we talking about when we say provider?
I think the dentist comment is assuming that the dentist owns the practice, and in our new climate, that is not always the fact.
I'm going to ask a quick question to follow up on that. In line 22, could you require that the dentist or the designee, or does it have to be provider because you're using the NCLEL language and that's what they said?
Kevin Robertson, Executive Director, Kansas Dental Association. I think changing in line 22, changing provider to dentist is perfectly acceptable and would make it much clearer.
Clear to me.
And I
Clear?
do think it probably says provider, with all due respect to the reviser, probably because that's what the NCOIL
Exactly. That's what I was thinking.
legislation said.
So maybe then change provider both times in line 22 to dentist would still have the intent of the bill and be workable? Absolutely. Okay. Thank you, Madam Chair. I think I'll have an amendment later if we work it, so.
Thank you, Madam Chair.
Yes.
Can I just verify that there would not be a situation where it would be like a leased back office situation where they would be acting as, in lieu of the dentist being, quote unquote, the provider, or if you're ever incorporated where the entity itself is the provider of services, not the individual dentist? Those are my only two questions. And I'll also say that I didn't draft the bill,
No,
so it's
yeah.
difficult
Right.
for me to kind of put myself into the drafter's point of view and what they were thinking when they did do it. I'm just trying to clarify, to run through my own mind, if there's ever any situation where this language would be, switching it to dentist would not be appropriate.
Yeah, Kevin Robertson again with the Kansas Dental Association. I think you're good because it says or the designee. So I think even if there's a case that you're thinking through, I think or the designee would catch that.
And I agree too, because even if I'm working in a corporate model.
You want to go to the mic, please, and then,
Dan Nielsen, private practice dentist. Even if I'm working as a dentist in a corporate model, the decisions that start all this come from me. The treatment was by me, but I'm obviously having someone else take care of the billing for me. So I feel that that would have the spirit and intent.
good. Senator Gossage, did you have a follow-up?
Thank you, Madam Chair. I just wanted to mention that, so the crux of my stating that I am a member of NCOIL, therefore I don't always agree with all of their amendment or their wording because they're not necessarily insurance experts, and but they mean well, and they're trying to look at insurance law. Had this come before me in committee, I would have not voted for it. And it's only because of the way that the wording is, and I feel like I would like to see a National Dental Association meet with, because we have major carriers, to meet with the major carriers about the issues that they're having with the dentist and with reimbursement. I don't think it's anybody's intention, I would hope not. They're just trying to look for expediency to get the money to the dentist, especially from what we read from the opposition testimony. Thank you, Madam Chair.
Thank you. All right, any other questions? We have another hearing today. Senator Fagg, quick.
Real quick, okay. Thank you, Madam Chairman. A couple quick things, that 3 to 6% catches my eye, and it makes me think the insurance carriers are probably making a little money off that, can't prove it. Just you think about your credit card getting cash back. So, the other thing is, do you know any other industries that have a similar problem? Like other doctors and that kind of thing?
It's interesting you say that. That was asked in the House committee. I didn't have an answer for that, and I do have a neighbor, I know this is very official, who's a vet that battles the same thing. And I will tell you, I do know that they do make a profit on that credit card percentage.
So, the other thing, follow up, a final one, in here, it talks on this bill, says a dentist agent may charge reasonable fee. Have you ever, when you say, okay, you owe me $100, if you just tack 107 on there, send it in that way, how they would react to that?
Meaning the patient?
Yes. Or I mean the insurance carrier. If you knew that carrier was hitting you for 6%,
Sure.
could you just send them a bill that includes the 6%?
No,
It says
we aren't.
reasonable fees on it.
We are not allowed to bill them additionally, and even if we were to raise our rates, we are contractually, on average, I'm taking a 35-cent reduction on my fees, so this is 100% deduction, and to pass it on to the patient, it would just, we want to be in good graces with them, we're trying to help them, so we don't see a great way to recoup.
Okay, you're passing it on to the insurance carrier. You know, when you go out and eat today, they'll throw 3% on there. Same kind of theory, so just a thought on that. Thank you.
Thank you. All right, committee, thank you. Robust discussion here. We have opponent written-only testimony that I think you're aware of. There's a single letter in here from the Director of Government Relations for the National Association of Dental Plans and the American Council of Life Insurance, insurers. All right, committee, we will close the hearing on House Bill 2564. Thank you for being with us. I'm going to open the hearing on House Bill 2497. We're going from dentist to mortgage. So, Eileen, would you like to brief us on this bill?
Thank you, Madam Chair, members of the committee. House Bill 2497 amends KSA 16-207 relating to the prepayment of certain loans. The bill was sponsored by the House Committee on Financial Institutions and Pensions at the request of Representative Hoheisel on behalf of Catalyst. The bill passed the House Committee of the Whole on the February 18th, with a vote of 87 to 37. So under current law, no penalty is assessed against any party for prepayment of any home loan evidenced by a real estate mortgage where that prepayment is made where the prepayment is made more than 6 months after execution of the note. The bill would amend that provision to provide that no prepayment penalty would be assessed against any party more than 6 months after the execution of a note evidencing a home loan made primarily for personal, family, or household purposes secured by a real estate mortgage. And if approved, the bill would take effect upon its publication in the statute book. And Madam Chair, I can stand for questions.
Committee, any questions before we hear from our conferee? Yes, Senator Warren.
Just a quick question. Thank you, Madam Chair. Does the bill apply retroactively to existing contracts, existing mortgages, or? Nope. Yeah, it doesn't say, so I wouldn't think it would, but, okay. Thank you. Thank you, Madam Chair.
Thank you. All right. Thank you, Eileen. We have one conferee with us today, Michael Stidham, Director of Regulatory Affairs, Rocket Mortgage. Welcome. Welcome to the committee.
Good morning. Thanks for having me. Good morning, Madam Chair and members of the committee. Again, my name is Michael Stidham. I'm the Director of Regulatory Affairs with Rocket Mortgage. Rocket Mortgage appreciates the opportunity this morning to provide testimony in support of the proposed amendments to the Kansas contracts and promises statute, which would specify that prepayment penalty restrictions are only for the consumer purpose loans. Under current Kansas law, lenders are not allowed to charge a prepayment penalty, again, after 6 months of closing a mortgage loan. Also, Kansas law does not differentiate between the consumer purpose mortgages and business purpose mortgages obtained by real estate investors. Rocket agrees that prepayment penalties can cause undue financial burden obtaining credit for personal, family, or household purposes, collectively consumer purpose loans. However, prepayment penalties can be a beneficial option and result in more favorable pricing on business purpose mortgage loans taken out by real estate investors. These business purpose mortgage loans for investment properties have different pricing structures depending on whether a prepayment penalty is attached to the mortgage loan. Specifically, mortgage loans with an agreed-upon prepayment penalty receive lower upfront pricing, resulting in a lower rate or origination fees, whereas loans without a prepayment penalty are priced higher and offer lower potential returns if a loan is paid off earlier than anticipated. House Bill 2497 would retain the restrictions on prepayment penalty for consumer purpose loans while giving real estate investors seeking loans for business purposes, purchases of investment property, the option to agree to a prepayment penalty and secure a lower rate and or origination fees. House Bill 2497 ensures consumers remain protected by existing Kansas prohibitions on prepayment penalties while providing real estate investors additional flexibility on their agreed-upon loan terms on business purpose loans for investment properties. That concludes my testimony, and I'm happy to answer any questions you may have.
Thank you. So 35 other states currently have this legislation in place.
Currently, 35 other states do not prohibit prepayment penalties on the business purpose loans, yes.
Can you describe to me what a business purpose loan might look like? Because you talk about affordable housing, rental
so that's,
housing.
Rocket Mortgage, that is really our number one focus is affordable housing. We're trying to help everyone home, and that can look different for a consumer. Some consumers want the dream of owning their own home, and then there's others that they don't really want to own a home at this time. They would rather rent. And I have a 30-year-old that would rather rent right now because they don't want to be tied to it. But a business purpose loan is an opportunity for a small investor to be able to purchase a rental property, which over time, they could create some generational wealth And that's what we're looking to do. We're looking to provide those investors an opportunity to negotiate with their lender whether or not they would like a prepayment penalty. Again, they don't have to take the prepayment penalty, but if they elect to do a 3-year prepayment penalty or a 5-year prepayment penalty, they get a little bit better pricing, which saves them a little bit of money.
Thank you. Questions, committee? Senator Fagg?
Thank you, Madam Chairman. Thank you for your presentation. Why 6 months? Has there been any analysis? Because I know you got a front-end cost of booking that. That's the theory, and you're going to pay it off quick. I just wondered how you set the 6 months to that.
Well, the 6 month is what's currently in statute.
Okay.
Yeah, that's what current Kansas law is. So we offer either a no prepayment penalty, a 3-year, or a 5-year. That's just based on the investors that we deal with. And again, it's up to the individual whether or not they want to elect to do a prepayment penalty. One thing I can tell you, though, with individuals that do elect to do a 3 or 5-year, that tells me that they want to probably hold that asset for a longer period of time, which in a lot of cases reduces the house flipping that we can see from time to time. And house flipping, unfortunately, inflates values because a lot of times you've got someone who will come in for 6 months, they'll do some repairs, and then they sell it at a higher price. And that's one of the ways that we see prices become inflated in certain areas.
Thank you.
You're welcome.
Senator Warren and Senator Gossage?
Thank you, Madam Chair. And looking at current law and what the bill proposes, it looks like the main change is that you are designating that the law would apply to personal, family, or household purposes, and you're excluding the business purposes. Am I getting it right?
Yeah, we want to keep the law in place for your consumer purpose loans. And again, that would be someone buying their primary residence or a second home. We want those prohibitions to remain in place.
So if you're buying it for personal, family, or household purposes, you could still opt to have a prepayment penalty and then get the lower interest rate? Is that what we're talking about, or?
We only have currently in the law, it's only 6 months, you get up to 6 months. So a lot of times it wouldn't make sense to do a prepayment penalty for 6 months or less.
Okay, and so this is intended for the house flippers? Is that what the bill's looking at, or?
No, again, this is kind of like the opposite, right? So if you elect to do a prepayment penalty, again, that means that you're probably going to hold that asset. You're going to retain that property as an investment property, and that really negates the house flipping. So that's why that's like a benefit to doing this. One, the investor would get slightly better pricing, but two, they're going to hold the asset and they're not going to flip it because they don't want to incur the prepayment penalty. So we know they're going to retain it for at least as long as the prepayment penalty is.
So does the bill exclude the personal, family, or household purpose person taking out the mortgage from the benefit of the lower interest rate?
So
If they want to have a
yeah.
prepayment, I'm trying to not penalize our personal, family, or household purposes.
100%.
If they want to opt to have the,
Yeah, the current law is there's a prohibition after 6 months. You cannot do a prepayment penalty. So we're trying to keep that in place because we want to create that safeguard to remain in place, but yet we want to give the investor at least an opportunity to look at prepayment penalties because typically your small investors might be a little bit more savvy about prepayment penalties and they understand that, you know, the risk associated with it. So we're actually trying to protect consumers for your personal, you know, family or household purposes.
I'll have more questions, I'll just ask offline. Thank you, Madam Chair.
Senator Gossage and then Senator Hill.
Thank you very much, Madam Chair. My question was along the same lines as Senator Warren, but we know now that, you know, you win $1 million and you decide you're going to pay off your loan on your house, and you would not have a prepayment penalty. That's what the current bill says. But if it was anything other than your own home residence, you couldn't pay that off without having a penalty. Is that right?
No, again, this only includes your business purpose loan. So whatever the individual buying a primary residence or a second home, the current law states you can only have a prepayment penalty for 6 months. So in a landfall that someone does hit the lottery or something, they'd be able to pay off their home.
I don't think I made my question very clear. So anything other than a private residence, so meaning I own a business.
Oh, okay.
Or I own a rental property
Gotcha.
or whatever, no matter when I want to pay that loan off, I will incur a prepayment penalty.
You will if you elect it. That's correct.
I don't know what you mean by elected.
Because you don't have to take the prepayment penalty. It's just an option for someone that's buying an investment property. They can elect to do no prepayment penalty. They can do a 3-year prepayment penalty or a 5-year prepayment penalty. So this just creates additional options. That's all this is.
Okay, so then I guess I don't quite understand the prepayment penalty. I thought that just meant any time you paid off your loan. Isn't that?
It'd only be for the term of the prepayment penalty. So if you did a 3-year prepayment penalty, and if you paid it off in year 3, you'd have a 1% prepayment penalty.
Okay, thank you. I
mean,
had no idea.
So you're saying if your mortgage
Sure.
is a 3-year mortgage, you have to hold on to that and not
You have to hold
sell
on
it,
to, you don't have to hold on to it.
Oh.
You could sell it if you want.
but you'll have a penalty.
That is correct. And most investors would not want to do that. They would want to hold it because they don't want to incur the penalty, and they want to receive the better pricing and lower rate. So it's the trade-off. Because a lot of times when we sell the loans to investors, those that don't have prepayment penalties, they're trying to guard against an early payoff because they're not going to realize the income from it. And that's why the pricing is so much higher than if you elect to do a 3-year or a 5-year prepayment penalty. We pass that savings along, and what it does, it creates an opportunity for the investor to either buy down their rate or buy down some of their closing costs. Again, it's not a landfall, but every little bit helps. And again, we're trying to create an opportunity for folks to be able to create generational wealth and be able to save a few dollars along the way. Again, it's not a lot of money, but it's better than nothing.
We only have a few more minutes left, so I'm going to let Senator Hill ask his question.
Thank you, Madam Chair. Thank you for presentation. The question I would have is why we even have this section in here? Because if I'm a person buying a home and I want to get a lower rate and I plan to stay in that home for 5 years, why do I have to have a protection from government? Can't I read a contract? I mean, I don't think, it isn't the issue of exempting out commercial purchases. I question why we don't have residential purchases able to do the same thing. I mean, if I decide that I'm going to buy my home as an LLC instead of personal property, I could finance it differently and potentially get a lower rate. Is that correct?
Yeah, and that's a good question, and it's just the way the law is right now, Senator. Right now, the law is, within 6 months. After 6 months, you can't do a prepayment penalty. We had worked with the Office of State Bank Commissioner, because typically when we do new legislation, we always want to run it through the regulator first. And I think they wanted to keep that safeguard in place for your primary residence and your second homes, the way the law is written today with the prohibition. But they were okay with it kind of differentiating it out between consumer loan, business loan.
Thank you.
Okay, any other questions, committee? There are no opponents. Thank you for being here today.
Thank you. Appreciate all your time. Thank you.
Certainly interesting. Thank you.
Thank you.
And we had no neutral, so, I don't know, Derek, was there anything you wanted to add? I know you're lurking in the background. Okay. Thank you. Thank you very much. All right, committee, I'm going to close the hearing on House Bill 2497. Thank you for your great questions today. Our next meeting, of course, is tomorrow, and we do have a bill hearing. It's 2590, and this will be a bank bill on trusts. So that's why we only have one hearing tomorrow. It's going to be a little complicated, perhaps. So thank you so much. Meeting adjourned.